Good morning, everyone, and welcome to the European crossover webinar. We've seen the dollar strengthen a bit overnight. We saw the Australian dollar come down into some very nice key support. I shared out in the chat rooms. We had good support at 75.98. I believe that was a low to the pip, or 75.99. Anyway, just basically, there's a couple of guys in the room were saying a heads up on where to go and cover any shorts that you have. We're going to cover the stories. The reason it sold off and the low pip was 75.99. I tweeted out before it got there, I think about 20 minutes before it got there, that was the key support there. You know, I talked about the 76.12 with Blake. So I mentioned that, you know, before the FOMC meeting. I thought that was a good area for people to cover because I thought the FOMC meeting would come out initially dollar bearish, not that much, but obviously it weighed a little bit strongly than what I would have thought. But we got the report that Moody's had written down Australian banks, and that sent the Aussie dollar and the Kiwi going lower. We'll take a look at those stories. That was a key driver overall for the evening. Those says Australia and New Zealand dollars slide on negative outlook for bank ratings. Australia and New Zealand dollars were knocked lower on Friday after ratings agency Moody's cut the outlook on Australian banks to negative, providing investors an impetus to sell both currencies. You know, one thing that's interesting, not interesting, but I think is key. You know, why you want to go in and, you know, always on this show, I like to start out covering at least one, if not two stories, because those provide the theme, the driving theme for that morning's trading. You know what I mean? So it kind of gives you, this actually came out last night, a little bit later, but came out at 10 o'clock Central Standard Time, 11 p.m. Eastern Time. So from there, the Aussie dollar's been on the offer the whole time. You know what I mean? So it's been a very nice move lower overall, but it whacked it pretty good. But you can see here it fell to 76.32. Well, it didn't even stop going down until about an hour ago at 75.98. So you can see where the news kind of helps you. It provides a theme on where the market's going to go to. Trader said the Empedonians were ripe for correction, and sellers surfaced on news that Moody's was considering cutting the ratings of Australia's major banks due to sluggish profit growth. Also undermining the currency was the euro buying after stops were triggered above 148. The euro sped up to 148.27, having bounced up 4 cents since a low touch last week. The Aussie's on track for a 0.7% loss for the week, having erased earlier gains. Based on speculation, U.S. Fed is no rush to raise rates. We've rushed, you know, this Aussie's come so far so fast anyway. So let's go and take a look also. Says dollar edges up after weekly loss. I told you I thought that dollar yen was a pretty decent buy. The whole take on that was, I just don't think that they can. I think traders are cognizant of that. I didn't buy it, but I did go long dollar CAD, and I was trading in out of the crude yesterday. That market's just been a monster. But I'm not letting go of those dollar CAD. It's a very small position, but I'm not going to let go of that. The reason I was saying that is because I didn't get long dollar yen. But my point is that I just don't. I think the traders are also cognizant of that. Is they can't let the dollar yen get a foothold below 100, because if you do, it's over. Forget it. Because then, I mean, I know one bank strategist, I forgot who, they're looking for a move to 96 within 3 months. You get a foothold below 100 and frickin' forget it. You're not going to get above it. You're just not going to, because if they get that foothold below 100, any moves above 100 on action that the BOJ would take will be faded big time. It's not that people are ready to buy the dollar yen now or actually sell yen, but you get that foothold below 100 and it's over. It's done with. I mean, you'd have to use helicopter money, and then even at that point, they'd be selling rallies up to like 105.5. Not they won't now, but I'm just saying, you get that foothold below 100 and you can forget it. And I think traders are also aware of that, and that's why I just didn't see us. I mean, it's not like we're way above 100 right now, but earlier we were down at what, 99.60s, and we saw a rally of about 90 pips. I just don't see it. Just don't see it getting that foothold at that time, which was yesterday, and still not for right now. I don't remember when the BOJ meeting is, but I just don't see them being able to get much of a foothold. And I think traders are cognizant of that, as I said, and are less apt to try and push this thing lower. So there's not even any U.S. data today. There's Canadian inflation and retail sales, and that's it. There's nothing here. It was another reason that I was indicating yesterday I thought there was a great area to short the euro, which was that zone, and we'll look at it, which is 1338, which you got up to 42 at Besbeck, and then on the upper part of that zone, which is 1365. In the chat room, we were short. We got short at. Someone were getting short right as we got above 1315. Finally, I just, said, okay, look, I'll go and take the short here too, which was 53. But my area was at 65, and actually right before the futures closed, and I'm saying is the 60, we got this bounce up real quick, and I was able to get a real good area off right there at 1364, because we had that 1365, and it hung there for about 3 minutes, and all of a sudden it quickly fell off a quick 8 pips. It doesn't sound like much, but jump back up, and then it just started sliding back down, and our plan of action was to cover at 1332 and at 1315, and we got that. Then we got a little bit earlier dip, but that worked out okay, which is not bad considering what a tough road to hoe is, which has been crude oil, which has been completely wacko. But we're going to move into the charts. So here we are on the euro dollar, and I mean, it's had a big move. One of the things I was talking about yesterday and also with Blake is, which I think is really key also, is price structure, and why I thought this was a good short up in here. Even if you got 1338 and still hung on, you never got out, you're still up money. But I covered my positions, discussed that in the chat room, and then got short on the way back up. And the 53 was pretty good. I actually told them in the chat room I was waiting for 62, and it just sat there, wouldn't go anywhere. So I was like, screw it, I'll take it. Which was at 1353, and then we sat there for the longest time. We didn't do anything, and then right before the close, they jumped up real quick up to this area, and I was able to get on 64, and that was just unbelievable. Like, I thought maybe they'd try and work a little bit higher, and I was a little bit concerned. But as I discussed with Blake, on Fridays we kind of focus more on kind of like a tutorial in a way, looking at different things to that we might be able to benefit, whether it's like a day trading scalp. And obviously, August has been, as you know, really quiet, and you had to, discussing with one of the traders in chat room, Anders, we've done well. I don't know why the hell we've gone into other markets. I mean, I've done pretty good, okay, with gold, but we've done really well just trading the euro. So, instead of, knocking my head up against the wall with the doggone crude oil, which has been just an absolute beast to trade. Not going to lie, it's just been a tough market because we're just not getting that good, back and forth action. Even the pullbacks, and I was scalping it yesterday for nickels and dimes. It's still tough as a rock. But anyway, once again, one of the things I like about trading the euro is that you get very nice moves, but you have very good liquidity, and you get nice back and forth action. You can see that here. So unlike crude, I'll give you an example, which is been on a one-way street. Here we are trying to push back a little bit, back towards highs again. But one of the things that I was looking at, and why I thought that it was limited what we could move in the euro, and that's not to take any kind of a bow, certainly because I've gotten knocked about decently in crude oil. So it's not even here to flap my wings or anything like that. But in the euro, I thought that, this move that we had already, because if you look here, pull this out a little bit. And we already covered this, but I'll do it just so that we're all, once again, I always say on the same page. We've done a lot of work in euro here, in this whole area right in here. You see, so from a price structure standpoint, meaning that we did a lot of work here, and we had dipped, but we had held over, and we had held this area very well here. That opened the door for the potential. There's never no guarantees. One of the guys in the chat room just mentioned earlier this morning, he was like, no one knows for sure. It's all about probabilities. And Blake says the same thing, and it's true. And you have to look at it that way. It used to, when I was first starting to trade, it used to frustrate me. People would say, well, if it doesn't go here, it might go there. And I kind of have to look at it that way from a probability standpoint, but I'll look at price structure. So when you look here and the work that the market had done, because, we had blown out here, we came back here, and we did a lot of good work in here. That opened the door for the market to pop up. Didn't mean it was going to pop up, but I mean, technically, the market was set where the door was open if they were to want to take it for this market to move higher, which is exactly what it did. And then it even stretched it up here. You see it to 78%. I remember taking some shorts. So like I said, I don't even know why the hell I haven't just been trading just a euro, because other than my hiccup right after the FOMC this last month, other than my hiccup there, I've had a really great summer trading the euro. When you make a mistake, you make mistakes. And like I said, the crazy thing is that when we got that FOMC, I've already shared that story multiple times. I got here, I told the people in the chat room, if it gets past 1048, it's bullish. And I don't know why the hell they didn't pay attention to my own, my own take on that. But I kept thinking, okay, they're going to pull back a little bit. They're going to pull back a little bit. But it's been a good summer overall. For trading the euro. My own analysis on that, with the exception of this one hiccup right here. So the price structure here that I thought when we came back, because we had that taken off, we did a lot of good homework in here, and it's not like we had fallen apart, opened the door for us to move higher. And I knew that and which we did, we had this run, we came back in here. This kind of explains to where we are right now. So when we got the FOMC minutes, this is what I didn't understand. People trying to hang on to their dollar longs into the FOMC meeting. I thought that was just crazy. I really did. Hang on a moment. Just going to post some stuff here. Let's go. Just a second. Okay, so anyway, we had this run up here, and like I said, after the my whole take was going to the FOMC minutes was, and then once again we're laying out the strategy for the as we review the week, and we kind of look at how things look out for the week going out. My whole take was, I didn't think it certainly was going to be hawkish, but I didn't think it was going to be dovish. But that'd be cautionary. Cautionary is that they'll sell the dollar initially, and that allow for a good area to short the euro. And we did get that. I mean, but it only pulled back just a little bit. And I remember covering those shorts. I don't know, I covered them for a very small amount. But anyway, I remember covering them, and obviously we went higher here. And that was, I don't understand why people were trying to hold on to dollar longs going into the meeting, because I thought it's going to work against the dollar. They have a better area to short it, which it did, but the give back wasn't very much. So fast forward, we had this move yesterday, and it's August trading, but my take was, I just didn't see, as I discussed with Blake, the catalyst for us to move higher. I discussed yesterday a gentleman, trying to remember his name, but he asked me yesterday. He's on the webinar from time to time. I've seen him and say, "Hey, Paul, do you think if we get a close?" And that's a good question. If we get a close above 1350, do you think that opens the door for 1450? And I just didn't see it because, as I was discussing with Blake, I just didn't see the catalyst for another move. It's August trading. They'll stretch them out a little bit, but I just didn't see the catalyst for another upper move. And that's why I discussed about this 1338, which we saw a nice sell-off, from here. I shorted it. I covered it. Honestly, I don't remember where in the morning I covered it, but I discussed in the chat room. So then I was waiting for a move back up. And I was trying to be patient, which most of the time I'm not. And I finally waited until we got up here. And I was waiting for 1362. And finally, when this market wouldn't do anything, I got short, 1352 or 53. I think it was 53. And then the market just sat there for the longest time. And then finally, right before the futures closed for currencies, then we got this pop up here, and I was able to short 64 because I had this. There was my range here. I'm just going with the levels, and here's my. People have asked me about these. Some people call them bands. I call them zones, where I color in these zones. And I discussed this. If you remember yesterday, I discussed this pretty well with Blake, and I was talking the significance of this 1338. And here it is, you see? And all the way coming across in here, you see here, how many touches at 1338? And I thought, at the very least, the market will ultimately end up pulling back. See, here's 1338 here, once again. And here's that 1365. So I thought that was going to be a great area, and that's exactly where the market ran out of gas initially. Came back and got to the top of the zone. And my point was, your risk wasn't great. I mean, you had a very nice risk reward. But as I was discussing with some of the guys in the chat room, I go, you know what? Look, it's August trading. Just take what the market will give you. So my whole take was, if you remember, where did they run out of gas? Initially in the morning, before we got that move up there, we actually ran out of gas right here. I think it was right here, which was 1332 initially. So I told people, I go, hey, you want to cover at 1332, and then I want to cover the second half of it at 1315, because this is there. Now, it looks like it shows shot, but if you look on a 15-minute, initially it held that area, and then eventually we came back down. And I was telling people in the chat room, I said, hey, look, 1306 was the low yesterday. Remember? So they're going to try and they'll probably just take that out by a pip or a couple of pips. Okay? So we'll look here. I'll show you. So I like trading the euro. It's just ridiculously awesome. The low here in the morning. See, now this is before we took up this high. But the low after setting this high at 13 here was 06. You see that right here? So look how they came right down to this 04. They took that out. That low after setting the high here, it only made it to 6. Notice how they took that out by 2 pips. You see that? Came down here. There was some additional support here at 1296. So if you're trying to scalp it for the long side, I almost did, but I thought I'm not going to try and get fancy down on it. I almost bought it at the 05. And I said, if it goes lower, I'll buy here at 12.96, which is more solid. And I would have come in at 12.96. I would have taken the long side. I wouldn't mind that because I'm flat right on the trade. But I thought about buying low 5. I thought, you know what, just go and buy it and watch them pop back up. But I thought, you know what, they can still come down to 12.96, and I could add. I go, you know, it's not that far from the top. Why don't I just wait? And if it takes a dip to 96, I'll step in and buy them on 96. Scalp them out. But it only made it there down to 4, and then we moved up here. But it's relatively quiet trading. That's what I'm saying. In August, I've discussed this with Blake too. When you get your levels, you just have to take those prices. You got to take them. And I'll give you another example. We talked about, and FX has been trading just awesome over the last few days. If you cover or you initiate your entries, I mean your levels at good entries. And a case in point is here on the Aussie dollar. Let me clean this up a little bit. And this isn't to say, oh, if you would have done this when I said this, you would have done. No, it's to point out that you really need to stick to these levels in this August trading, and you're actually being, not only is it's giving you a great risk reward, which is what happened to us yesterday in the chat room, shorting at 13.51. I mean 50. Well, some of the guys were at 51. I waited, and I was like, I'm not going to wait again because I know that Andrews, he shorted yesterday. I think it was early in the morning European trade. I think he shorted the euro at 28 or something like that. And then I chased it like at 23 or something like that. It did dip, and I covered me. And I was like, oh no, I don't want this to happen again, because I sat there for a long time. They started putting them on, I think it was at 51. And it sat there, and I thought, you know what, if this thing starts to fall, I'm going to be really pissed off. And so when I shorted it, like I said, I think I shorted, I think 53. Yeah, the stream sit there real quiet. And I thought, okay, now it's going to fall. And it did. I mean, it just sat there. I think I dipped like 3 pips, and it sat there for the longest time. And then when it jumped up, and I saw, they're coming up to this 13.65. I gotta add on at that price because I think it's pretty good. But I was saying this: when you come with these great great entries, your risk reward is just ridiculously awesome. And we talked about this with the Aussie. Remember here this run, and where the market ran out. I guess this is when Blake was. He was still recovering from his Guns N' Roses concert. And remember that morning it ran up here? And the dollar was getting whacked really hard. But once again, if you pick these entries, you really did well. Well, we talked about the same thing with the here in the Australian dollar. Right before the FOMC minutes, I even tweeted the chart out in both chat rooms. This chart here. And I don't think anybody even covered. And I thought, how can you not cover ahead of the FOMC minutes? This is a good area. Well, this morning we came down here, and I was showing people that 75.98 was a good support level, and I thought that's what they may go to. And we'll go into the charts. Saeed is looking at the Aussie, so I'm going to move into the charts and show where I was coming up with this 75.98. You know, when you look at the crap from crude oil, the FX markets have been just trading really nice. You just have to come to good levels. Look at this. I tweeted this out before it even got there, which I mean, it was good. I'm not in the Aussie dollar, but some of the guys were, and it was awesome because they were able to get out right at or near the bottom. This is where I came up to 75.98, you see? And the low was 75.99. Once again, the thing isn't like, let me give myself a pat on the back because you know what, I wasn't in the trade, so what the hell would I be giving myself a pat on the back? No, the point is to go and share with y'all is, you see, if you come in at these very good levels, you can really do well as far as managing your risk, and obviously this one played up really well, but getting the most bang for the buck. You see, so I told them 75.98 and the low was 75.99. But on the way down, some of the guys had already jumped out. I think they were getting out at 10 and 08, which 08, that's fine too. But I'm saying is, it was fantastic to see some of the people be able to benefit. One of the things I like about the exponential moving averages, and I've got it here, it's the same. I have it on a 15-minute chart so I can see things move a little bit quicker, but it's the same exponential moving averages off of my 30-minute. They're just adjusted for a 15-minute, okay? So, but one of the things that, okay, so you see here, when we got on a sell signal, you see how it rides it out for a while, and then we flip to the buy signal. I've told you before, one of the best signals you'll find is this. I found is the case. When something flips from a sell to a buy and back again. You see right in here? That's usually a very strong signal. You see? So we flip, and see, this is on a 15-minute, so it seems like it lasted longer. This is the same 30-minute EMA. It's just adjusted for 15 minutes. But if you were to look at it on a, and it's not going to look good because it's on a, if I do it for a 30-minute, it's going to adjust this and that's not going to match up the way it should. But if you look at this, and you would actually have half the bars. But if you get a dip like this, okay, we move to sell, you flip to buy and you go back, generally the force of the move is very, very, very strong. Because what happens is they got short. The people that end up getting long here on the momentum, they're forced to jump back out again. Those guys and gals are not going to come back to the market. So generally what happens is, okay, you get this move here, very nice. You get here, but no, not much. You know, it did come down, but it doesn't last very long. We flip to buy and then back. Generally, the extent of this move is very powerful. Obviously, we did have a catalyst, which was Moody's potentially downgrading the Australian banks. You see what I'm saying? But we came into a very good area right here. But the thing is even though it's August trading, if you really come in, I mean, if you really make the most of your levels, and you can see these levels, it's nothing magical I'm doing. I'm just going through the amount of touches, okay? You can really, I'm not saying rev up your trading. I'm saying you can really manage your risk really well and even do really well to get the most bang for your buck on the trades when you do get them out. You see what I'm saying? By going, I mean, usually once we're in the fall and spring and after Christmas on that, you get a lot of give and take in these markets. But when they're quiet like this, you really have to make the most of your entries and your exits to get the most out of the trade. So let's go back to the main charts. Lorena says, can you take a look at dollar CAD? And Saeed says, are they 20 and 40 MAs? They're exponential moving averages. So what that means, I mean, you probably already know that, but exponential means they have more weight to the more recent bars. I generally do this on a 30-minute chart, but a 30-minute chart's fine. Just look here, and now these moving averages are not adjusted for the 30-minute. As on the 15-minute, okay? But you see the 30-minute, you get some, that's why you want to look at different time frames. You look a very nice shooting star right here. But with the 30-minute, that may take a while for the bar to go and form. That's why I've gone with the 15-minute. And you could look and say, this is, think, well, okay, that works better here. But the exponential movement averages I use are 9 and 27. I adjusted them to 18 and 54 because I moved the chart to a 15-minute bar. So this is actually the 30-minute EMAs right here. And you can see they work really well. You see what I'm saying? Here's another example right here. I'll show you right here. You see here? This is what I was talking about. So let's go and move this here. Notice how we dip to a sell, and then we immediately flip back to a buy. You see that right here? This is what I'm talking about. When you see that, generally the following move is very strong. Because now the people that just got talked into shorting it now have to turn around and cover, and they're like, oh, hell no. And then some of those people, they're going to wait, and they're going to say, no, I'm going to hang on to my shorts. I'm going to hang on. Oh, my God, this is getting a little bit tough for me. Uh-oh, I think I'll have to get out. And then the other people have already gone with the momentum. So generally, like I said, this fake out, these moves are, you catch some very good moves on you see, we're on a buy. Everything looks all hunky-dory. We haven't moved a whole lot, but, we're moving higher because you got the buy right in here, right here. So everything's looking all hunky-dory, everything's going. And what happens is as it you wait for key levels to go to where you're going and lop off your longs, or at least a portion of it. As it comes back in here, then you're going to pick areas to go in and buy. You don't have to necessarily buy at the lower moving average, but you're looking for areas where the retracement might be. Maybe it's at 38%, whatever. So now it dipped into the sell. Okay, so it dips into the sell and immediately reverses back to the buy. Generally, this move is usually huge, and you already saw it the other way around too. So here, that's what I'm saying is, you could have said, well, if I'd have been on the 30-minute, I would have been short. But you see here, generally when you get something like this, okay, it's sell, now it's to buy, back to sell, and look, the movement wasn't even very big. You see what I'm saying? So, I mean, even if you're short, you wouldn't have been down very much. But I'm just saying is, when it flips back the other way, frickin' forget about it. Usually when it flips back the other way, after just, you see like this, they faked them, you see here. Well, now, okay, now we're going long. Wait a minute, we're going short. Usually the extent of this move is usually frickin' big. So that's a way to use it to also, I mean, generally when this crosses over, it's just going to be to sell, on the sell mode. So you're looking just for the momentum play. A lot of times I don't even pay attention to my EMAs very much, but they kind of keep me out of trouble. If I can see the market, I go, okay, you know what, it's got the momentum going with it. But generally when you see this here where it breaks up and immediately in short order breaks back down, the extent of the move is huge. And it works the same way I just showed you on the opposite side, going the upside. But let's go and go back to the charts. Say it's a thanks point, really interesting. Yeah, I've been using those exponential moving averages for years, and I'd forgotten about them because I used to use them in crude. And I noticed a relationship that you get, you know, with these markets where, I mean, obviously some markets are ridiculously trending, which is like here in the crude oil. You can see here, once it flips to the buy, you see how it just rides it. And, you know, obviously that's going to happen with any market that's trending. But let's go on and move in back into the charts. And Lorena says, can you please take a look at dollar CAD? We'll get to that. I think it's already time for a break. Yep, it is. But we'll get to the dollar CAD. And I'm long dollar CAD. And a couple of guys were asking about this yesterday when we were in the 27. I think we were actually above 28, I think, at the time. And I think we were at 28.20. Oh, and I told the guys, I go, I want to see it move like into the, I think it was like into the 70s or something like that, or 80s. I don't remember what it was. And the guy goes, oh, we're here. And I go, you know what? Let's see if we can get just to dip a little bit lower. And I'm just not going to let go of mine, although we've made a run up here. But we're going to go and take a break, and then we'll discuss the dollar CAD. Really, this is just going to be a play on this if you think crude is topped out. And really, crude is still kind of strong, but the dollar CAD is really taking a whack. So we're going to take our break. We're going to get back, and but we'll take a look at this. I think obviously the safer trade would be if you're going to play the crude trade of topping out, we'd be better to pay the dollar CAD or sell the Canadian versus just trying to straight up trade the crude, which has been an absolute monster. But we're going to go and take a break, and then we'll get back, and we'll cover the dollar CAD extensively. So take a look here. I'll leave this here for perspective. And thanks for joining us here on the crossover. Okay, everybody, and we'll come back to the crossover. And we're going to go and take a look at the dollar CAD for Lorena. And we've seen a pretty good sell-off in the dollar CAD, you know, overall. Obviously, on the backdrop of the meteoric move, I guess you would say, in the crude oil market. So we've seen this pretty good fall off in the dollar CAD. Obviously, the move was extended or accentuated with the paper released by San Francisco Fed Governor Williams, which basically indicated that they could maybe consider exploring pushing out inflation targets. And that really kicked the dollar pretty hard, which was, what was it, Wednesday evening, I think it was. But, or, well, actually Tuesday evening into Wednesday morning. But we've seen it push even further as crude pushed higher yesterday. But I think that we've seen the bulk of the move. One of the things that one of the gentlemen was looking at yesterday, who had asked, what do you think is a good area with the dollar CAD? I think it was trading, I believe it was trading in the 28.20s at the time. I said, no, because we had talked about this 27.94. I go, I really want to see it dip even lower. You know, let's take out the stops here. That'll help, and let's see where we can go. So at the time we're trading the 27.60s, I even told the person, I said, hey, let's see if they can even push them into the 50s. But that was really stretching it for all she's worth. I think that at this point that the dollar CAD's a pretty good buy overall. It looks like the crude might be starting to top out. We're starting to lose a little bit of momentum. And we've had a pretty good run here in the crude oil market. So I think we have the opening here for a move in the dollar CAD. I think that I really don't even see really breaking 27.50. I've got stops just right under 27.35, and I'm not going to let go of it because I think that we've seen a pretty good. For one thing, the Canadian economy is really weak. I think they will have to take action, and if the crude does top in here, that'll really open the door for the dollar CAD to move higher. The next key area is right here, this little zone, but the main focus is going to be 29.09. That's going to be the main focus. We do have Canadian data today, so I really think that we have a chance that we could really start to see this dollar CAD work higher from here. And to me, this is going to be the key area right here for the short haul. This is where I think that the market can run into. Right into that area. With the Canadian data, I think we'll be able to break through this area. That's not going to be too much of a struggle, I don't believe. So I think, they may have a little bit of trouble initially, but I think that the key area for them to go to is going to be right in here. Between 29.09 to 29.32, and I think we'll make it up here to 32 before you see the market, may push back a little bit, but I think that we're going to go, and I think that ultimately I think this market will go for 130. With the idea that crude's topping, and it looks like crude's starting to lose a little bit of its momentum here. And really, for a crude play, this is the far better one. Joseph says Williams is a clown. I read that last night. He was talking about cost rates hikes sooner than later. So in a 3-day period, he says the Fed should raise its target inflation benchmark. Then he suggests a September hike is appropriate on the back of a stronger wage growth. It's comical. I gotta agree with Joseph here. I really do. I didn't see that part, but that's pretty freaking idiotic. But I told you they're not gonna raise rates unless we get at least 245K plus on the next NFP, and you see wage gain growth of 0.3. That's the only way that they would raise. But yeah, that's pretty unbelievable. Joseph put the link on there. Fed Williams, if it was Fed Williams, calls for the rate hike sooner than later. Yeah, here's what happened on that so Williams sends the dollar just tumbling big time, and then Dudley and Lockhart came in the next morning, and then that's when we saw the dollar strengthen. They came in, they were suggesting hikes, that it's really soon, it should be sooner than later. Now, if it was Williams that said that also after the fact, then that, you're right, that's just ridiculous. Although his paper just opened the door, they should possibly wait. And this is a move that, remember, I was talking that I thought could happen to Jackson Hole. It's just that Fed Williams did that, he jumped the gun on that and really pushed it then at that time. But that's my take here on the dollar CAD. But great point by Joseph on that. Well, Eric says in the FOMC meeting, wasn't it noted that some voters think that they should hike soon? Yeah, but you see, things change, and just there's going to be votes where people say, I think it should be sooner, but I'm saying is everybody's wondering, what are they thinking right now? So, obviously when it came out with that paper, then that's what really knocked the dollar, But we'll see how this all plays out. But I do like the dollar CAD. I do like the dollar CAD here. So looking at the cable, we struggled here. We made it to this 31%. You see here? And then we had a very nice, I wouldn't call this a shooting star because the wick is not long enough. Because, you think of a star's in the sky. So it's a shooting star. This is more closer to a gravestone doji. Nonetheless, it is a bit bearish. That's what I'm saying is when we made that move up here, it was a good area for them to lay off the wrongs. And we actually made it. Remember, if you remember this is pretty interesting. Once again, it's all about your levels. We were talking about that this morning, how FX has really been pretty good if you come in at your predefined levels. Remember how the market ran out of gas right before the 31.78 yesterday morning? And look how they went up here and they took it out. They came down here, and that was a good sell right here, if you look at it. Because here's the deal. We failed before the 31.78, the 61% in the morning yesterday. Then it comes out and takes it, and look at this close. And it closes below these closes here. You see? So that was a very good bearish sell signal. You see? And we take this dip and we come back and look how we failed at the closes. This is what I always do with my touches. You see, I don't pay attention to the high bar, the low bar. To me, that doesn't mean crap. I go with the touches, meaning the most, like all these closes, you see? So if you look at the significance of that here, I'll show you. Usually on Fridays, it's more like a tutorial session that we look at. Okay, you can see right here how the market closes. You see how we we can't take out 31.78 initially. We fell before it. We get above it, and notice how this close right here is below these bars. This close, this open, this close bar. You see what I'm saying? This close here. So that opened the door, and notice where they. When they come back, look where they fail. It fails right before that line on the closes. You see that? And it was a door for move lower. But the thing is that because it's a quiet period, we discussed this with Blake yesterday, you really have to be very choosy where you come in with these levels. Just like we did yesterday with the euro, and you'll come out well. The ranges aren't very big, but the thing is, if you come in with these good levels, you'll do really well. Someone was asking about the SPOOs earlier, and they asked about it yesterday, and I went over this. I said the area to short it was 2182.5. And we dipped in here, but we've got some very nice support. Someone was asking me this morning, also, I said we got some very nice support here at 21.76. It looks like we just took a dip. I didn't even see that. So we did get down to what, 21.75. But I said 21.76. You see, once again, they're all about the touches. You see here? There's 21.76 right there. The 21.82, you see right here, we've got the 82, but I said, hey, look, give them the extra half a handle. And that's 21.82.5. Right there. They did get up to like 84.25. And then we had a pretty nice little fade. We're in limited trading here in August, very limited levels. Why it's important that you come in at specific levels, so you have a chance to really manage that risk good. The Swissies come back up here to this 95.80, which is a key level. We discussed that before. See that here? It could be a little bit of a struggle here. Sometimes this thing takes a while to really kind of get going. Once again, it's August, so I wouldn't necessarily expect anything big either way. But obviously, as we come towards the end of the week, the dollar certainly is under pressure compared to where it was a week ago. Gold has been an okay market. The only thing is I'm not up in Asia. I've made a few dollars trading this thing, but I'm not in Asia, and you get some nice moves in Asia. It's a very popularly traded contract in Asia. But it's been in this well-defined range. You know, my whole thought has been, I see it as a double top on the daily chart. There's a daily chart here. And I think we just have to work lower. But once again, you have to come in at these good levels. But it's trading relatively quiet. I'll open this up a little bit. We start to see some dollar strength, and this gold is going to come under so much pressure, it's not even funny. So, I still think the trade is, which I've been saying, which was short the gold at 1354. But we've had these bounces up in here at different times, whether it's in the U.S. session or the Asian session. You've had some good opportunities to just scalp and take a few. I took $4 out on FOMC day. And I really missed this, but I'm not up in Asia. I don't think this was in Asia. I think this was at the height. This was at the height of right when after Williams had whacked the dollar, and then we had that run up on the print, and then it gave it all back because Dudley and Lockhart, they were talking about their stuff. So, but that's about it. Blake should be coming on in just a few minutes. There's not really a whole lot. Crude's trying to hang on, but it is losing a little bit of momentum, but you got to give it to it, and it's been just a crazy market. I think we've got the momentum bulls have taken it, and they've run with it.